Am I hearing that I can go and work with churches to set up down payment assistance programs for their parishioners because they could give it as a form of a gift?
If you are purchasing a property from a family member, they can actually gift you equity towards that sale.
I'm hearing a lot of people who have made a lot of money off of the real estate sector saying you shouldn't own real estate. I don't want you all to listen to that stupidity. What's going on, world? This your girl, Marky Lemons-Ryhal, and today we come to talk about the almighty gift, baby. And we're not talking about no ordinary, generic gift. We're talking about a gift that can be given to you in order to purchase real estate. Now, I'm not going to say that this is Skylar's favorite lender, only because I don't want to offend anybody else. But I'm going to say you definitely in the fave 5. You the ride or die, go-to person. What's going on today, Janita?
Oh, I am doing very good. Thank you so much for having me, Marky.
But, the reason I have you is because it's not just Skylar, right? There's a little internal competition between Skylar and Jamal Green, right?
Yeah.
And think about this for a second. We have 2 Black men from the south side of the city of Chicago that were both birthed by unwedded mothers that both, last year did over $6 million in production. Both of them earned 6 figures. Both of them are in the same identical marketplace. And that would be the south and the west side of the city of Chicago. So to me, that's a testament to the value of down payment assistance. In that same market, you got Janice Simmons and you got Nicole Wheatley, right? So when I'm looking at my agents, I'm looking at 4 people who all earned over 6 figures last year from residential sales specializing in down payment assistance. And they love you and they love your bank. So let me just give a shout out to you today, right?
Thank you.
Very instrumental in the success of our brokerage, which did grow 34% year over year last year. But we came to talk about gift bonds. Can you tell everybody what a gift is?
Yes. So, as you know, you're going to have a down payment if you're not receiving 100% financing. Most programs do require that you have a down payment. If you don't have those funds, you're going to have to get those funds from somewhere else, whether it's going to be down payment, you're going to have to save, or you're going to have to get a gift. So there's a lot of guidelines that you have to follow. And that's what we're kind of here to talk about, to tell you exactly how to set up the gift that if you want to use that for your down payment. And it does kind of depend on the type of loan that you're going to be qualifying for. So let's start with the conventional loan. If you're receiving a gift for all or some of your down payment or closing costs, you would have to receive that from a family member first. It cannot be your friend. It technically cannot be a boyfriend, girlfriend. It has to be a significant other, fiance or husband or wife. But the biggest thing, it's supposed to come from a family member, or it can come from an employer, or basically from a third party, like a church, like if they're gifting you those funds, which is, I know that's a big thing that a lot of people don't know. So say that your church has funds available and they gift that to you to purchase your home, that can be used for your gift as well. So yes.
Come back up now. I'm going to pause, and I don't mean to interrupt you, but I am one of 18 instructors in the country that teaches the EAH, the Employer Assisted Housing Program.
Yes.
Am I hearing that I can go and work with churches to set up down payment assistance programs for their parishioners because they could give it as a form of a gift?
Yes, they can. Yes, they can. And it is accepted as a form of a gift. Yes.
Let the church say, amen. Wait, because that's a big one, baby.
It is. That's and a lot of people don't talk about it. And a lot of people, you don't see it a lot. So
all these churches with all this money talking about how they want to help the community. So For those who don't know, we have what is called an EAH, an Employer Assisted Housing Program, where we can go in to employers. The University of Chicago gives $20,000 to 9 different communities for their employees. Not that you're going to do an employer assisted housing, but you could do a down payment assistance program through a church, because the church under conventional financing can
Yep.
give that to its parishioners.
Yes,
Okay,
they-
come on now. Come on now. You coming out the gate like a thoroughbred. All right. Let's keep. All right.
Yeah. So say that you don't. Let's go back to if you get a gift from a family member, mother, father, brother. Let's be very specific, because you do have to list that relationship, because I see this all the time. I get a gift. Someone fills out a gift. So when you the gift letter, so you're going to have to provide a gift letter. You're going to have to be very detailed on that gift letter and say, who is it coming from? The relationship. And like I said, it needs to state your family member, mother, brother, cousin, uncle, aunt. Because I get it. And sometimes they fill it out and it says, oh, I got it from my friend. That doesn't work. It does not work for the guidelines. It has to specifically say what family member, that relationship. If it's a fiance, it has to specifically say that. The amount of the gift, the date that they gave it to you. Now, they can either give you the gift, and you can deposit into your account. So let's talk about that. Giving the gift. The best way I would say to source the gift is for them to give you a check, so they can see, the lender that you're working with can see who it came from. So it'll have their name, the institution, the amount, everything on the check. Now, if you do any other forms of payment, say that they give you cash and you go deposit it, that's going to be a problem, because how will we be able to source it to show that it came from your mother, your father, and they gave you the money? The only way for us to do that is now we have to go back and get their bank statement. And what if, that family member that's gifting you the gift is not willing to give the bank statement? Then we have an issue. So for conventional financing, the easiest way to give a gift is either one, have them write you a check, a cashier check or personal check, deposit into your account, and show the funds are there, or they can write the check out to the title company at closing. So they can simply, however much they're giving you, they will get the check before the closing. They make it out to whatever title company you're giving to, and then you will want to just provide a copy of the check, just have it handy, give it to your lender if you need it. So those are the two ways, the easiest two ways that I normally suggest my clients to do the gift. Now, you can also Zelle. I know, Zelle is popular. So if you do a Zelle, most of the time it's going to show who it came from, which the guidelines have changed on that. So if it shows who the gift came from, the name, and it's the same person that you put on your gift letter, normally that's fine on conventional loans. You don't have to show anything else. Now, say that they wired the money into your account. That's a different, or they wired it to the title company. Sometimes a lender may want to see their bank statement to show that they gave you the money. So, it can get a little tricky sometimes with the wire, but it all depends on the lender that you're working with. Some lender might not want to see that, but each lender has different guidelines. And I think that that's important, because what Associated Bank does may not be what Guarantee Rate does. It might be a little bit different with the lender that you're working with. So, and what they might want to see for some of these gifts. So like I said, to make it easy, get a gift from your family member, right? Get a check and either make it out to the title company or put it in your account. And then you would have those funds for closing.
Excellent.
Now we talked about conventional. Let's talk about FHA, because that's a whole different ballgame. But they did. These are in the last 6 months, they've actually changed the guidelines to kind of follow more of conventional standards for gift funds. So it always was standard on an FHA loan that no matter what, the donor had to give the bank statement to show that they had the funds to give you. They actually did change that rule. They don't have to, they can do one of the other. They can give a bank statement, or if they do the check and they show that who it came from, FHA will now accept only a copy of the check without the bank statement, which is huge, because for years you always had to have a bank statement on FHA. And I felt like that was the biggest, we had a lot of issues with, some people don't want to give up their bank statement. So as long as you get the check, and even on conventional or FHA, and it shows who it comes from, and it has the name, everything that they needed. There should not be a bank statement that is needed on either loan.
Excellent. So a little difference between the conventional and the FHA. We need a gift letter, state the relationship, the amount, and the date. And the best thing could be given a check, whether a personal check or a cashier's check, or sending a Zelle, because then it'll show on that Zelle who the money came from.
Yeah. And I will say, conventional, you might not have issues with the Zelle. Even on FHA, sometimes you might have issues with that Zelle. They might still want to see a bank statement because FHA guidelines don't specifically state that they will accept the Zelle. It says that they will accept a check. So if you get a Zelle, they might come back and say, well, we need to see the bank statement. So that's why I say each lender is going to be different about what they're going to be looking for to source that gift. But I would most likely, if you do a Zelle on FHA, you're probably still going to need the bank statement. So I would stick with the check to make it easy and make your life easy. Yes.
And I don't think that everybody who's listening understands that every bank, not every bank, but let's say that the bank does conventional and FHA. Each bank has the right to have what they consider their overlays. So there are no universal rules, right? They're like these bare minimums, but each bank gets to add an additional layer if you come in to get their money, and it's called overlays. So one thing I hear people, well, they do this over there. Yeah, that's a totally different bank with a totally different set of overlays. This is not one size fits all. And one of the reasons that I wanted to have a discussion about gifts is because I will say that I've been blessed. In my lifetime, I have been given $100,000 in gift funds. The first property I bought back in 1994, my grandfather gave me $10,000 to buy, this is crazy, to buy my mama's building from him. The building was in trust to my mother, and my mother had to sign off on the trust. For the mortgage was in my grandfather's name, for my grandfather to sell me the building for what was owed on it. That was the first time, but I still needed a down payment, right? So he gave me $10,000. The second time, me and my cousin were doing rehab projects, and my uncle wanted us to work together. And so he gave us $75,000, and we leveraged that using Smith Rothschild and at the time Shore Bank in order to do purchase rehabs. The last time was from my mother-in-law for the house we actually live in now, because we really weren't planning on buying. We were in the foreclosure crisis. It was 14 years ago. And so she wanted us to have this house. It is the best investment she ever made in us and our marriage because of the amount of equity we have now. So this past year, and we won't mention any names, I believe that one of my lifelong friends actually closed with you, in which case I gave her a $2,500 gift to give to her, the same way that I have Skylar's gift sitting in the bank right now. It's been sitting in the bank since she graduated from college. But him to be able to buy real estate, because so much has been given to me, I believe that I must give others the ability through the form of a gift. And I want people to start thinking about, when we look at the numbers from Dr. Lawrence Yun, how many people, one, have no mortgage on their current home, but the amount of cash buyers that are in the marketplace. Now, I know they wouldn't be coming to get finance, but how, you think about this as a parent, how I'm going to go buy me a new house cash and not have some money set aside for my two sons to buy a house? I mean, that's just not the type of mother I am. And so before I'm going to go buy me another house cash, I'm going to make sure that I have gift funds for my sons to be able to acquire real estate. The first thing is, I don't want to take them to the next house. I just want to be clear. I don't want to take the 28-year and the soon-to-be 18-year-old. They need their men. They need their own homes, right? And I'm making the assumption that there are a lot of parents who are thinking like me. So because we have equity or we have cash reserves, we might be willing to give it, but no one's asking for it. So we need to put this on their minds that, not only do you want a wealth vehicle, you want your children and your family members to have one as well, if they prove to be fiscally responsible. I'm going to throw that part out there, right?
Exactly.
And so we've talked about this gift, and you've broken it down so that people understand each bank has their own overlays, and there's a difference between conventional and FHA. But
You
what
know
I
I thought about one thing that you said that you bought, you bought your mother's home. Now, we didn't talk about a gift of equity. That's another
we're
big
talking
thing. Yes, let's talk
talk
about
about
equity. Because
wait, let me stop. And that I want to be very clear about these
yes,
numbers. I acquired that building 3 flat on 60th Street. It's probably worth $600,000 now. I was able, my mortgage was less than $50,000 at Beverly, the then Beverly Bank. I used the IDA program in 1994. My interest rate was 8.375, but that property had almost $40,000 in equity based on its value at the
yes,
time. Okay, I just want to throw that out there. We're going to talk about the gift of the gift of
so,
equity.
gift of equity. So if you are purchasing a property from a family member, they can actually give you equity towards that sale. So without, if you don't need, instead of transferring actual money from the bank account or getting another gift, you can. An example, I actually just had this when my aunt is buying a building from my father, their childhood home. He's gifting her the equity, almost, $20,000 of the equity towards her down payment. So now that she has no cost because he's giving her the equity from the building to be able to cover all of her costs. So, and because the equity in the building is there and he wants to keep the building in the family. So as long as it's a family, transaction, that is also an option that potentially the equity can be used as a gift. And there's no outside of that. There's nothing else that has to be done. It just has to be identified. It has to be listed on the application, and it's transferred at closing as a gift of equity. Simple as that.
Oh, so we learned another term, guys, the gift of equity.
Mm-hmm.
What I happen to know is you got a lot of money. You got a lot of money over the last couple of weeks. Like people are lined up for this money. Can you tell the world? Because guess what? Skylar counting, look, how much money is available. So tell me about what just happened at
Yes.
your organization.
Yes. So we just rolled out our 2025 Federal Home Loan Bank of Chicago grant funding. So we get this funding every year. We're normally awarded $1 million every year for all of our markets. So for Chicago, St. Louis, Wisconsin, Minnesota, we have funds available for all of these programs. I'm sorry, for all these markets. So let's talk about specifically for Chicago. So there's a $600,000 that was awarded to Chicago that can be given to first-time home buyers, so they can, to use to purchase their home, down payment closing costs. It's called the Down Payment Plus program. We have been a part of this for many years, and to be honest with you, it's one of the great one of the best programs I've worked with because it can be stacked with other grants. So currently, we're giving $8,000 from the Down Payment Plus program. A couple of things with this program, it is similar to IDA, but it does not have the 640 credit score requirement. So with us, our minimum credit score is 620. So as long as you're at 620, you can get that Down Payment Plus program. It does not have the debt to income cap requirement. So if you are at a 56.99% on the FHA loan, you can receive this grant from Down Payment Plus. Yes. So
Oh, no. People who listening didn't see my facial expression. So what I'm hearing is we can go down to a 625. No, we can stack the money. We can get 8 from you. We can go down to a 620 FICO score, and my back end debt to income ratio can be 56.9. So I'm assuming it cannot exceed 57%.
Because that's the FHA guidelines.
Okay, keep going.
Yes, but if you're at 56.9 now, we have an approval, you can get that grant. And the reason that I mention those things because IDA is a very popular product that a lot of people use, and I get a lot of questions on. That's the first thing. Do you do IDA? So to compare to IDA wouldn't want you at a 640, and you would have to have a max debt to income of 45%. 45% debt to income at 56.99 is a huge difference. it puts you in a whole different bracket of buying a home. So to be able to get down payment assistance up to 57% is huge. So it does have a 5-year retention. But during that time, you can still refinance if you need to, which is another thing. With IDA, you cannot refinance. You would have to pay it back. So if you decided, rates drop within the next 5 years, you would refinance, we would resubordinate that loan, and then after 5 years, it's 100% forgiven. So like I said, it has some really good perks with this program that can really help, a lot of people be able to purchase. So you can get the $8,000 from there. We are giving for first time home buyers $3,500, so they can stack. They can get $8,000 from down payment plus. They can get $3,500 from Associated Bank, and then there's still funds available through CHA. CHA has $10,000 for non-CHA members. If a CHA voucher holder decides to give up their $20,000, their voucher, they can get $20,000. So say that you get a client that qualifies for CHA, so giving up their voucher $20,000, they can get $8,000 from the down payment plus and $35,000 from us.
Well,
that's a lot of money.
Is that $31,500?
Yes, it is.
Now,
yes,
I want to come back for a hot second, right? Because there are some people who don't live in the city of Chicago, and they might be thinking that 56.9% back-end debt ratio is irresponsible. But I want to paint a different picture here.
Yeah.
I want you to think about the woman who's living in CHA. And in the Black community, this happens all the time. Okay.
Yeah.
And she's not married. She get a car that her man paid for because he want a Range Rover, right? So she got that $1,100 car note, but she's not responsible for the car note because her boo is paying for the car note. It's really his car, but she got good credit. Now she already know dude gonna cover this car note every single month, and I wish I didn't have to use this voucher. Okay, so now she could come in, she could get her loan, she responsible, she pay all her bills on time, but that car note is why that FICO score is 620, because it's an expensive car, right? She might have got it last year, or better yet, he want to turn the corner on a new car every 2 years, soon as that lease expires. I just want to paint a realistic picture. So now, my girl can roll into her house, get $31,500 to help her offset the cost. And dude can now put his car in a garage.
Exactly.
I just understand what's going on the south side and the west side, right? The car, I can almost promise you, and I might be wrong, is the number one factor throwing off these debt to income ratios, right?
It is.
For whatever reason. It's
either the car payments or student loans.
It
is. It's the car payment or student loans, because depending on the program that you're in, say that you have $80,000 in student loan payments and you're not making that payment. But then we have to use 0.5% or 1% because that's what the guidelines call for. Then if we have to use 1%, that's $800 a month that we have to add into your debt to income, even if you're not paying it. So that could be thrown off a lot of times. So, sometimes it can be thrown off your debt to income where you're really not making that payment, but then we have to add it in for guideline purposes. So,
wow. Okay. $31,500. Hey, you better go. And I know that this program you just mentioned is something that I believe J. Mall and Nicole Wheatley are very passionate about. And I didn't know it was 20,000 and that we could get them 31,500. And some of them just gonna get ready to get a nice little hefty refund check on them taxes. Yep. This is the year to own property. Was with Dr. Lawrence Young, and I'm with him quite a bit. However, wealth is built through real estate ownership at the tune of a $400,000 difference. So when people tell me they rent, I already know statistically that their true value, they don't have net, right? It is. It's like $10,000, right? versus $400,000. And so we want to encourage home ownership because everybody still needs a place to live. And I'm hearing a lot of people who have made a lot of money off of the real estate sector saying you shouldn't own real estate. I don't want you all to listen to that stupidity. And I'm going to tell you why. Because they're consistently buying the real estate so that you won't own it. They want a society of people who don't own anything. And you do not want to be that person. They want a renter's mentality, from not owning your car to hotels not owning spaces. Think Airbnb, VRBO. Think about, heck, right now, I'm not buying a new car, right? The reason is because I take Uber so much. I don't need a new car. I don't even have 30,000 miles on a 5-year-old car. But I own the house that I live in, right? I own other assets. Do not rent everything from the rental of the furniture. You need to own something. That is how our ancestors were able to build wealth, because of ownership. And we're becoming a society of people who will essentially be worthless to the world. I don't know if you're paying attention, but you do not want to be worthless to the world. So what else is new in 2025? Because we have more down payment assistance programs this year. I was just reading a report from Down Payment Resource. They now have over 2,000. Well, they have 2,466 programs, which was a 7% increase. And there's an expansion of down payment assistance available for multifamily purchases. Do you have any multifamily money?
I do.
Well, tell us about it.
Yeah, I mean, so what I mentioned, the all of the grants I mentioned can be used for multifamilies. Yes, so the down payment plus, I have a cap of 2 units, but our grant for the associated can go up to 4 units as long as you qualify for it. And that's one thing. Most of these grants are going to be location specific, and they're going to have income limits. So that is a big, that's a big thing. So when you're looking for what programs do I qualify for, you really want to work with someone that knows these programs, the ins and out of it, because and to know and just kind of tell you which is going to work for you. Because if you are making this amount of money and you try to purchase in this area, it really just depends on what's going to be available. And I think that's a misconception, because I got a lot of people that say, I'm a first time home buyer, I'm supposed to get something. So, when I'll say, well, yeah, you make last year $250,000 and you're trying to buy something here, there are programs that are still going to benefit you, but you might not get something from someone buying in this area that makes $60,000. It just depends, because a lot of them, and it's these programs are designed to help, low and moderate income areas to be able to make it affordable, and to get them to achieve home ownership. That's what these grants are for. Yes, but like I mentioned, everything that I've talked about today, we have are for multi-unit purchases, as long as you qualify for them.
Excellent. So, Janita, how does someone in the Chicagoland area, let's just go state of Illinois, reach out to you, because you just got $1 million that's hot on the street? Now, I'm going to be honest with you, I'm going to be in big trouble. Okay, Jamal and Skylar are not appreciating nothing. As a matter of fact, Skylar has called me since we've been on the phone. He probably told me to shut my mouth and stop this interview. Okay, but I want you to also be able to benefit, especially because of your knowledge and the fact that you're working with 2 very difficult real estate agents and you're getting their stuff closed. I work with these guys, so I know how they are, right? So how will one get in contact with you to do business with you and your organization?
Yes. So the best way to reach me, either one, you can call me by phone. I give my cell phone number, 312-401-0702, or social media. So my Instagram is just my name, first name, Janita, .Herndon. You can find me on Instagram or on Facebook. I get a lot of, response from social media. I think I do a lot of communication from social media because I've always I want to get this out to the community and can tell, when it's something new, I'm going to make sure I put it out there. We got this money just dropped, new grant alert. Make sure that you if you want information to reach out. So definitely either social media or just reach out to me directly. My office is in Bronzeville, so we do have an Associated Bank right on 47th and Cottage Grove. There is a bank branch there, and then there's a loan production office. So I am also there. If you feel, stop by. The bank is open Monday through Friday, 9 to 5. So, lots of ways to reach me.
And tell people the other markets that your bank is in that they have money.
Yeah. So like I said, I'm in the Chicago market, but we have a huge presence in Wisconsin, Milwaukee. That's our base. We just recently branched out to St. Louis. So we have all of this funds available in St. Louis as well. And we have a huge market, a big market in Minnesota. Minnesota is another market that we're really trying to tap into. Actually, Minnesota has the most money out of all of the markets. So instead of 3,500 like the other markets, they actually have 7,500 that they are giving for Minnesota. Plus, you can get the 8,000. And then there's a lot of other programs too. If you are first generation home buyer in Minnesota, I want to say that there's a grant upwards of $20,000 with no income limits. So if you are in Minnesota, please reach out to me because there's so much available for Minnesota because there is a lack of homeowner, and especially Black homeowners in Minnesota. There is the need. We have these programs. We can help you. So there's a lot of resources, especially, like I said, for Minnesota. There's some great programs, Wisconsin, Milwaukee, St. Louis. But I do lending. Michigan, I can lend anywhere in the Midwest, Florida, and Arizona. So 11 states that I am licensed in.
Oh, and I'm going to tell you what just hit me, because all of this was spearheaded by the National Association of Realtors 3 by 30. There is a goal that we will net 3 million new Black homeowners by the year 2030. One of the ways to be able to do that is to leverage these programs to ensure they have home ownership. But to make sure that everybody is compensated based on their value and their worth, what I am encouraging all licensed real estate professionals to do is, when you are doing your buyer consultation, ask buyers these 2 new questions. 1, is there anyone in your family or close to you that is willing to provide you with gift funds? 2, does your employer provide EAH, employer assisted housing? And if they tell you no, you want them to provide you with the contact information for the director of human resources at the organization in which they work for, so that you, the real estate agent, can go in and set that program up. We are teaching that through the Chicago Association of Realtors. And so all of this is for a greater reason, a national cause. But you have to understand what the programs are. And I'm going to give you this last tidbit. I did a whole video on it the other day, and it'll probably be the episode after this. Does your house have an anointing on it? So based on everything that you just told me, Janita, I can go back in to the system and I could tell my seller, hey, we should market this, and we should market your property exclusively, not exclusively, but highlight CHA voucher holders, because your home might qualify for up to $31,500 in layered programs, right? So instead of running for it, we are putting it out there in front. That now means that if I am the listing agent of that property, I am going to encourage my seller to not provide, get this, which is going to outrage some people. I'm going to encourage them not to provide seller to buyer compensation, because I already know that their property, the property address, can qualify for down payment assistance contingent upon the buyer. Yeah. I'm not saying we wouldn't give it up. I'm saying you can write it in your contract. But the first thing they need to do is qualify for this financial anointing that might be on top of their house.
Yep.
Just want to throw that out there.
I didn't even mention Hazelcrest, because there was a new grant for Hazelcrest.
Oh, I think I shared that. What's that?
Yeah. So if you are purchasing in Hazelcrest, you can there's a specific grant for Hazel Crest. You can either get 10,000, 7,500, 5,000, depending on how much the income limit it is. And I would say the income limits are higher. So if you're partisan in Hazel Crest, you're going to get something because they have these grants available, and it's through the South Suburban Housing Center. And we are one of the preferred lenders for that. So if you can get 10,000 from Hazel Crest, you can get 8,000 from me and another 3,500. So if you buy it in Hazel Crest, and I did, when you said that about the listings, I've actually done some open houses and been highlighting some properties in Hazel Crest just to make it some awareness around this grant, because that came out February 1st. This is something that's brand new.
Amen. Does your property have an anointing? So, Janita, I want to thank you for coming over here, for providing immense value. I'm pretty sure the phone is going to be ringing. Of course, I have friends in St. Louis, in Milwaukee, and in Minnesota who hopefully are tuning in and listening so that they can leverage these programs and reach out to you. Thank you.
Thank you so much. I thank you for having me. I really appreciate it.